Hey guys, Daniel here and welcome back to the Finance Channel. Here today we're going to be covering a company called Palantir, ticker symbol PLTR, and in this video we're going to focus on four main things. One, Palantir's business model, what they do, what their business is, how they make money. Two, we're going to go through Palantir's management team, who's running the company, who's behind it, are they reputable, and my opinion on that. Thirdly, we're going to go through Palantir's financials. This is their income statements, their profitability, their revenue growth, and their balance sheet. And then lastly, make sure to stick around till this. We're going to go through my 2025 to 2030 price targets for Palantir. And this factors in revenue growth, profitability, valuation, and etc. So without further ado, let's get into it, guys. So Palantir is essentially a big data analytics company that manages to take extraordinary amounts of data and come up with conclusions such as possible inefficiencies or spot possible trends and possible predictions based on those trends. Now, it's a very difficult company to understand because of the different products that they offer and the complexity of these products. So here we have a few examples when it comes to Palantir's different products. One is Palantir Gotham, and this is used mainly by the United States Army, that kind of sector, to essentially spot terrorism and counter it. And essentially how they do this is, again, by taking in different data points and predicting possible terrorist acts or terrorist locations and things along those lines. Next, we have Palantir Metropolis, which is used mainly in the finance space by banks, institutions, or hedge funds. And this is mainly used to spot insider activity, insider trading, and fraud. So essentially, I'm going to give an example here. JP Morgan used Palantir Metropolis to essentially try and find fraud and insider trading within their institution. They used emails, download activity, browser histories, and GPS locations of their employees as the data. And essentially, this is rumored, so I guess I have to say allegedly, they found so much data and fraud within JP Morgan just by using these things that essentially they covered the whole thing up and essentially stopped using Palantir, which just speaks in itself to the standard that Palantir's product is at and the power that it holds. Now, Palantir Apollo is essentially what runs everything, and it's what makes Palantir a software as a service company. All of this is held within Palantir Apollo, essentially kind of a program that holds all of these different programs. This is just a few examples, Palantir Gotham and Palantir Metropolis. Palantir has a variety of different softwares, and all of this is held kind of within Palantir Apollo. Now, again, if I wanted to go through all of Palantir's different softwares, we could spend all day here. So instead of doing that, I'm going to link a video down below. And this video takes you to the Palantir Demo Day. Now, this is around an hour long, but it's well worth the watch if you are very interested in Palantir and possibly thinking about investing in it. And what this video goes through is a demo of a variety of different Palantir products and gives you a good understanding of the power that they hold and why people want these products. So I really recommend you go down, watch that video after you finish this video to get a better understanding of Palantir's business model. So, like I mentioned previously, the government is a big part of Palantir and make up a large majority of Palantir's contracts. And my face is covering this, but, Palantir closed around $150 million in new contracts just in 2020 from the government alone. So obviously the government makes up a big segment of their revenue. And I mean, this is good. It's very recurring revenue, a very stable kind of customer, I guess you could say, that will continuously kind of expand and use Palantir's products going forwards. And that also speaks to the quality and standard of Palantir's product. If you have the government continuously adding or continuously spending more and more money on your platform, that speaks to your product in itself, which is, again, very good in terms of looking at Palantir's products. So here we have a snapshot at who is running Palantir, the people behind it. So at the bottom here we have the CEO, Alexander Karp. And the thing I like about Alexander is that not only is he a very well-educated, very reputable person, he is a co-founder of Palantir, and he's been in the company since 2003 when it was essentially founded. And I think there is something that comes from being with a company from the very beginning, having that connection. You can't really get that from a CEO that isn't a part founder, and having Alexander be a part founder of Palantir really creates that connection and makes me feel a lot better as a possible investor in this company. Now, Peter Thiel, he is also a part founder of Palantir. He sits on the board, and again, he's a very well-respected businessman And, he's someone that a lot of people trust going forwards and is one of the reasons why Palantir has gained so much momentum just generally in the markets as of late. So again, before we keep going here, make sure to drop a thumbs up if you enjoy this type of content. I know a few people have been dropping dislikes on my videos. Again, if you're going to drop a dislike, I'd appreciate it if you drop a comment as well, letting me know what I could possibly do better. My goal is to provide the best content for you guys as possible, and I can only do that with feedback, so thanks for that. Next here we have the balance sheet, and then so this is kind of one of the main things that I look at with a company to determine risk. And with Palantir, they have around $2 billion in cash on the balance sheet, and that's been growing pretty substantially quarter over quarter. That's over double what it was a year ago. And when we look at debt in a second here, non-current or total current liabilities sit at around $600 million, while total liabilities sit at around $1.1 billion. Only around $200 million in long-term debt here. So, given this balance sheet, I think Palantir in itself is very well capitalized going forwards. I don't think there's any problems with the balance sheet here. It starts to get problematic when you've got more debt than cash, and the fact that they've got, almost 2 times the cash as they do debt is very bullish from the perspective of risk reward. So here we have Palantir's income statement. And this is where we start to kind of analyze the company on a financial level. Total revenue has been growing pretty significantly over the past few years here, and I canceled out the trailing 12-month revenue, as essentially it is the 2020 revenue, and it was a little off. So again, we're looking at 2018, 2019, and 2020 revenue. It's been growing significantly, pretty much year on year, growing about 35-40% every single year. It was around 600 million back in 2018, now at around 1.1 billion. Now, the thing about Palantir is their revenue is very high margin, sitting at around 70%. As we can see here, total revenue was around 1.1 billion, while cost of revenue was around 350 million, which gives us a nice gross margin of around $750 million. And see, this is when we kind of get a sense of how that is translating to net income. That $750 million translates to $1.2 billion in loss. And we have to kind of explain this by going through the operating expenses. Palantir spends a lot on research. They're a growing company and they're spending that. Also selling general and administrative expenses. Now, again, these are very high expenses, and Palantir's excuse for this is the fact that they're investing in the future. And they're saying that we shouldn't be looking at costs now, as we're merely bettering our business model and gaining more customers now that will benefit profits going forwards. So given that, although it isn't ideal, I think it kind of makes sense also for tax loss purposes. Having that, few $1 billion in net income loss is beneficial with taxes down the road once they eventually do become a profitable company. This is kind of what we see with a lot of tech companies nowadays, spending a lot more kind of generally with research and development and general administrative expenses. I don't think it's too much of a worry, but again, this is kind of one of the risks that does come with Palantir. Eventually, they'll become a very profitable company. With 70% margins, I think this will be a very profitable company, but right now, they're spending a lot on growth, and that's honestly acceptable. So here is the fun part, where we get to analyze Palantir's fair value looking at 5 years and 10 years down the road. Now, one thing to know, I'm looking at Palantir with a very neutral viewpoint. I'm just taking the numbers that I'm received and plugging them into this model and coming up with a bunch of different scenarios that may or may not come true. So one thing to note is that Palantir is an expensive stock here today where it's trading at a price to sales of 41.3. This is one of the more expensive stocks in the stock market, even after the giant drop that we've seen over the past kind of month or two. So that is something to note with Palantir. It is already an expensive stock, which is why we have to look out 5 to 10 years down the road. So what I did here with revenue, management expects to hit around $4 billion in revenue by 2025. Now, I agree with this. I think they can surpass it, which is why, I have around $4.1 billion in revenue for this kind of model. We'll change up the numbers in a second here, which implies around 29% compounded annual growth rate for the next 5 years. 5 years after that, I have them growing at around 24% compounded. I think just because of the law of big numbers, percentage increases in revenue will decrease as the years go by, and I think that's a pretty realistic scenario for Palantir. Then I'm giving them a profit margin of around 30%, which again, I think that's realistic. Their gross margin is around 70%. So as time goes on, I think they'll manage to decrease their research expenses and their general and administrative expenses. And, obviously factoring in taxes and things along those lines, I think they'll eventually hit that 30% net income percentage, which essentially means for every 10% or $10 in revenue they earn, around $3 goes down straight into net income. So next I gave them a price to sales of around 60. Now my reason I gave them a 60, obviously they're a tech company. They're going to be valued more rich than a majority of other companies. They're growing, they're very profitable, recurring revenue business model. All these things put together give it a valuation, in my opinion, a fair valuation of around 60. Now this is debatable. This can be considered extra bullish or extra bearish, which is why I'm going to kind of give out a bunch of different scenarios here. I think this is very fair in my opinion. So given this, we have upside of around 60% over the next 5 years, implying a price target of around $38.40. If we look 5 years out more, if we look out to 2030, we have a price target of around $112.58, or upside of around 369%. Now that's a little more interesting if we look out that far. But I'm going to be honest with you guys, if we use these numbers, I wouldn't buy Palantir, which is why we need to change some things up. Now, obviously, we're going to change the share price in a second here to come up with a bunch of different scenarios. One thing that I'm going to change, though, is the price to earnings ratio. What if Palantir trades at maybe an 80 price to earnings? That changes things dramatically. Now, the price upside is around 113%, or a price target of around $51. And then 5 or 10 years out, we have upside of around 6x in price, or again, a price target of around $150. Now again, management said they'll hit at least $4 billion in revenue by 2025. Let's say they beat this by maybe a significant margin, and let's probably increase this to not 22, let's increase this to 32, sorry. That would be bad if they only increased revenue by 22% every year. If they did that, they'll have around $4.5 billion in revenue by 2025. Again, I think that's pretty realistic. That's more on the bullish side. But again, that increases that price upside pretty significantly. Now we got an upside or a price target of around $56.14, right? And obviously, if they did grow at that pace for those 5 years, that kind of upside in that growth would stay for the following 5 years. So, we can maybe assume around 26% growth for the following 5 years. So again, that kind of makes this a little more interesting, right? Now, again, this is a little more on the bullish side, but now we're kind of getting to a better deal when it comes to Palantir. 134% on the upside over the next 5 years is a significant amount. And, for certain people, that is a good return, a great return even. It's really up to you to determine that. Some people could say that they should be trading at maybe 100 price to earnings, which is something closer to maybe an Amazon. Now, if we do that, obviously the price target gets increased substantially, 192% on the upside with a price target of around 70. And obviously longer term, that's even more. Now, in my opinion, I think a lot of good things have to happen to Palantir over the next 5 years for this price here today to make sense. Again, in my opinion, I think this is a better deal if it goes under 20. I think there are a lot of good deals out there in the market. There's a lot of stocks that are falling pretty significantly. Yesterday, I made a video, 15 stocks to buy in this market crash. One of them is Palantir, but there are a good amount of stocks out there that are trading at cheap valuations that will almost certainly at least double or triple over the next 5 years here based on their valuation. But okay, let's assume the market keeps going down. Maybe Palantir falls another 20%, which is something that could very well happen. Now Palantir becomes a better opportunity in my opinion. Because now, obviously, with this bullish case scenario, we get, an 11x over the next 10 years, or around a 3.5x. And obviously, you got to play around with these numbers, right? If we go back to that 60 kind of price to earnings ratio, that gives us around 111% upside. So in my opinion, I am not buying Palantir unless it goes under $20 per share. Now, these price targets are just a fair value. It doesn't mean the market is going to value Palantir like this. I mean, Palantir is trading well above a 60 price to earnings here today. I mean, they're trading at a 40 price to sales. If they were trading at a 40 price to sales down the road, this would be a company worth, significantly more than it is today, around like a $400, $500 billion market cap. But again, It all depends on how the market perceives Palantir, what the valuation is like. If they trade at an 80, this could be substantially higher. I think Palantir is a very great company. I love what they're doing. I think the business is going to do exceptionally going forwards. The only thing I don't like in the stock is the valuation. I think that's one of the big risks that comes with Palantir. So thank you guys so much for watching. If you enjoy this type of content, make sure to drop a like, and thank you guys so much for watching, and have a great day.